Hey, good morning. It's Mike Shunke, Berkshire Hathaway Homes and Shipton Properties in Scottsdale, Arizona. Heading out to a meeting here, but want to touch base. Friday morning market chat with Mike. We're going to talk about residential, we're going to talk about commercial, and we're going to talk about the economy and the jobs number this morning that everybody was waiting for. First of all, inventory. It's down a little bit across the board. Remember, we do single-family detached homes. Scottsdale, we lost another 25 single-family detached homes available for sale. Tina Tambour early this week pointed out, you'll see the headlines, we are seeing like an overall increase in inventory. But if you break it down, you'll see most of that inventory is under 1,500 square feet. It tells me it's condos, townhouses, people want to get out of those. Now, why do they want to get out of those? Because insurance costs. Second home insurance costs have gotten outrageous. HOA insurance costs. So the cost of holding that property has gotten expensive. So a lot of investors are selling those condos, anything under 1,500 square feet. Everything else is pretty stable. You know, we're a little light on inventory still in the single family detached homes, but we're getting there. You know, it doesn't happen overnight. Prices fairly stable. We've got supply and demand. You know, they're both down a little bit, but it's pretty normal. December is typically the best time to buy a property. Sellers are wanting to get out of the property, want to sell by the end of the year. Buyers have a lot of negotiating power. You'll see some of the headlines this week was first-time home buyer average age increased to 38. 38 years old is the average age for first-time home buyers. Many people don't know first-time home buyer is not necessarily a first-time home buyer. It just means you haven't owned a home in 3 years. So you could be 50 and you haven't owned a home. You've been moved from California to Arizona, rented for 3 years. You are now considered a first-time home buyer. And there's a lot of programs out there for even those people. Divorced, homemaker that man or woman goes out and gets divorced, buys a home. That person is a first-time home buyer. So when they say it's 38 years old, just know that they're banking on the affordability and how houses are expensive now, but houses have always been expensive. That first-time home, getting into that first-time home, I remember even in Connecticut, $188,000, and I didn't make hardly any money. But it's always been hard to get into a home. So you gotta really crunch down and, you know, get your savings there, get help from family. Ryan Serrant, hate the quote, New York $1 million listing, whatever. He said he's noticing a lot of people are out there in the market. They're not liking what they can afford. You know, that's the whole Instagram age. Everybody else is keeping up with the Joneses. But he says, you know, get in. Get in the market. It's a good time to buy. If you're not in, all ships rise, you know, as prices keep going up and up and up. Real estate over the last 50 years has returned 5%. So think of it like an upward pressure on real estate prices. So if you're not in the market, if you're not in the game, you're just going to miss out. So that was interesting. In December, like I said, it's typical. It's a good time to buy. And how do you get into those deals? Pose an interest in the property. Go see it in person. On our listings, we'll get offers on listings. The person never saw the property. That tells me they're not really interested. Second, show your ability to pay. Get your proof of funds. Get your pre-qualification, your pre-authorization. Get your financing in order first. And let the seller know you're serious. And then make an offer. You know, I'm never afraid to put an offer in front of somebody. Maybe verbal to start and see if we can get the ball rolling. But let's have a conversation. So we're still seeing a lot of things happen off market, but a lot of people are waiting until January to list their homes. I keep hearing that a lot this week. You know, let's have the discussion now. What do we need to do? Let's, you know, we have the network. Let's get the word out before you list your home and get it sold. So when that rush of buyers, especially in the Scottsdale area, January really picks up. It's just the time of year, all the activities in town and things. So it's interesting. We're here to help. Let's just have a conversation, see what we can do for you. Commercial, starting to see some big deals. The Brookstone just sold a huge portfolio to Brookfield Properties. Now, don't confuse Blackstone. Don't confuse Blackstone with BlackRock. Everybody blames BlackRock. BlackRock does not own real estate. Blackstone owns apartment buildings. So, and that's 0.5% of the single family home market. So that's not a lot, really. But, private money, as I've been saying, is sitting on the sideline. They see these big deals going through, big deals, and $50, $100 million deals. They see them starting to get activity, and they start sellers of industrial buildings, commercial buildings, strip malls, small mom and pop. They start getting excited too, and the market starts picking up. So we expect commercial really start jumping here. New administration coming in is real small business friendly. Small business is the core of America's economy. And that, what did we see yesterday? Jeff McGovern, small business loan guy. He says that on a 25-year SBA 504 loan, they're offering 6.09% over 25 years with 10% down. I've got another guy, if you're a business professional, doctor, dentist, they're offering 100% financing for you to buy the building that your practice is in. And that's what we do. Let's sit down and look at the numbers, see what we can make happen. So, small multifamilies picking up. There's a lot of interest. We're getting calls. People want to pick up the 5, 10 unit buildings. Light industrial, the small contractor, small business, 5 to 10,000 square feet, super hot. If you want to develop those, give us a call. We'll find some property. That's going to be big as the new administration comes in. And so commercial's picking up here. This morning we had on the economy, we had the jobs report, unemployment number. Pretty much as expected. So not real excited. It was, it wasn't really going to move the market. The market expected up 227,000 jobs to be created, and that's pretty much spot on what it was. Unemployment 4.2%, maybe a little bit high. But the bond market, the markets kind of didn't really have much reaction to it because that's what they expected. And that's what I always say, by the time you hear the news, it's already been traded on. Investing in stocks, bonds, real estate, you're really kind of making a prediction of what the market is thinking. Markets are efficient. Everybody supposedly has the same news. So, there's really no reason for Fed to cut rates. The economy is pretty stable. That's what the Fed, I've always said. I did not used to like Chairman Powell. But, he's been standing strong. This economy's stable. And that's what we want to see. That's what investors want to see. Investors don't like uncertainty. Remember, the stock market is not the economy by any means. And the Fed rates, that doesn't affect mortgage rates. It's a piece of it, but, there's so many moving parts. What you see in the headlines is not really affect you on a day-to-day basis. So we're keeping an eye on jobs. Gross domestic product came out this week, 2.8%. That's good. Jeff Bezos came out with an interesting statement. He said, we've talked about the debt, and the debt is a problem, the U.S. debt. Jeff Bezos came out with an interesting view on it, that let's increase GDP. Let's increase production in America, and that will offset some of that GDP and the higher prices. I don't know. Maybe it's a thought. Let's look at that. We've got Elon and Vivek cutting costs, so it'll be fun, or it's going to be a fun year. Some think we're heading into these golden times here, so it's exciting. The economy is exciting. We do have a Santa Claus rally. You may have heard that topic. Every year you'll see bond markets go up. You'll see stock markets go up. You'll see real estate prices go up. Investors are rebalancing portfolios. So there's that upward pressure again on prices. It's called the Santa Claus rally. It does exist. And that's why you're seeing kind of an overall upward movement in all the different kind of asset classes. So that reminds me, year end's coming up. So if you've got to do something by year end, give us a call. It's never fails. We get calls 2 weeks to go. Mike, I need to buy this or I need to sell this. Happy to help. But we're getting there. It's crunch time. So a lot of agents take this time of year off because people are busy with the holidays. We're open. Our phone's ringing. We answer our phone. It's always in my pocket. My job is to take the emotion out of the deal, facilitate, educate, and advise. So if we can help you buy or sell residential, commercial, investment properties, land, anything to do with real estate, give me a shout. Happy to help. 203-733-5877. Thanks again for watching. I appreciate it. Have a great day. Be smart, be safe, and we'll talk to you soon. Bye.